Welcome back. Now, India's third quarter GDP data was announced after market hours on Friday, and it came in at 6.2%, which was in line with the CNBC-TV18 poll. The previous year's GDP numbers were also revised higher. Latha is here with more details on that. Latha, good morning.
Well, the numbers of the Q3 GDP clearly seem to indicate that the economy has turned the corner, or bottomed out, if you please. The growth, of course, came in at 6.2 for the third quarter. That was in line with CNBC-TV18 poll. But look at the internals. The sectors that did well: agriculture 5.6%, trade, construction 7%, trade, hotels, transport and communication, a very big employment-heavy sector, informal sector 6.7%, and real estate and finance 7.2%. All these are employment-heavy sectors. We should note that usually means good news for consumption. Private final consumption itself, that is looking at GDP from the expenditure angle, showed a growth of 6.9% for the full year. The forecast is 7.6%, so much better than the 5.6% in FY24. Now, the weak points are that manufacturing didn't do well, 3.5%, and capital formation, gross fixed capital formation, which has been the engine of growth for the past 3 years, has clearly slowed to 5.7%. If you look at the internals of the data, private investment is really low. But if you looked at the output side, the MOSPI is expecting, the Ministry of Statistics is expecting the full year growth, including Q4, to come in at 6.5%. Now, if you do the math, if you subtract the Q1, Q2, Q3, then Q4 has to give a growth of 7.6%, which could be a little tough. But, we can give benefit of doubt because of several things, like the RBI rate cuts, like government capex coming in strong, as the CEA pointed out. Now, the important point is Q2, the FY23 and FY24 have been revised hugely higher. FY23 from earlier 7.2 to 7.6, and FY24, last year that is, bumped up by 1 percentage point from 8.2 to 9.2. Now, this becomes important because last year's third quarter actually is 60,000 crores higher than we thought. In spite of it, the economy has grown at 6.2%, which means it's really a fine clip. So the point is, Q4, if it is not 7.6, it can well be over 7%. Now, the question I would like to leave with you is, if it is going to be over 7%, then shouldn't people be buying stocks now? So there is a small hope in the market that the GDP numbers may at least stop the FPI sell-off.
Yes, certainly we're hoping for that. Latha, thanks a lot for that update. Now,